Meet Jeff. He's done Masters in Behavioral Finance and PhD in Quantum Economics. He's also a certified CFA Level 3. He built a 47-variable algorithm to predict market movements. He's read every Warren Buffett letter in Latin. He's analyzed 12,000 earnings calls. He's got a spreadsheet named the God Equation, and yet he lost $800,000 in 2022, while his 19-year-old niece, who thought ETF was a type of yoga, made $1.2 million by buying a meme stock because her dog licked the screen. Welcome to Why the Smartest Investors Lose, where genius is the ultimate liability. The smartest investors don't lose because they're dumb. They lose because they're too smart. They overanalyze, overoptimize, overthink, and they wait for the perfect moment, the right valuation, and a clean technical setup. The bullish divergence on the 15-minute RSI. Jeff whispering to himself, the MACD just crossed the signal line, but only by 0.003. Should I wait? Meanwhile, the dumb investor sees Bitcoin at $30,000. Thinks, cool, I'll buy $100. Then goes to bed. Wakes up and it's $60,000. He doesn't even check his phone. He just buys a Tesla. The smart investor, he's still waiting for the correct entry point, which never comes. Because in markets, timing is a myth. But in action, that's a guaranteed loss. Studies show that the average investor underperforms the S&P 500 by 4.5% per year. Because of emotional trading. The smartest traders, they underperform by 7.2%. Because they think they're above emotion. Guess what? They're not. They're just better at lying to themselves. Here's the dirty secret. The smarter you are, the more you believe you're immune to bias. You think, I'm not emotional, I'm analytical. But guess what? Your brain is lying to you. You suffer from overconfidence bias. My model is better than the market. Analysis paralysis. I need one more chart. Confirmation bias. I only read articles that agree with my thesis. The illusion of control. If I tweak my portfolio just right, I can beat the market. Meanwhile, the dumb investor, he doesn't even know what beta means. So he doesn't try to control anything. He just buys and waits and lives his life. The smart investor, he's stuck in a loop. He's analyzing a 2008 crash while 2025's bull market is sprinting past him. He's waiting for the right time. But the market doesn't care about your PhD. It only cares if you're in. Let's meet the 3 deadly sins of the smart investor. Sin number 1, the model is God. My backtested model has a 92% win rate. Great, until the 8% happens. And it's not 8%, it's your entire net worth. Because models don't predict black swans. They predict what already happened. The market doesn't repeat. It evolves. And your model is a fossil in a world of AI-generated memes. Sin number 2, the hedge fund delusion. I'm going to beat the market like Ray Dalio. Okay, how many people have done that? In 100 years? Less than 0.1%. And the rest? They're charging you 2% fees and giving you 1% returns. The smart investor, he pays $10,000 per year in fees to a quant who's just running the same index fund, but with a fancy name. It's algorithmic. Translation, I'm charging you for noise. Sin number 3, the waiting game. I'm waiting for a 10% correction. I'm waiting for inflation to peak. I'm waiting for the Fed to pivot. I'm waiting for the AI bubble to burst. I'm waiting for the perfect moment. And guess what? There is no perfect moment. The market has gone up 70% of all years since 1926. If you wait for the right time, you'll wait forever. The smartest investors lose because they think they're playing chess. But the market is playing Fortnite, and you're still loading the game. The real winner isn't the guy with the PhD. It's the guy who doesn't even know what dividend yield means. He bought VTI in 2018, set up $200 per month, didn't check it for 5 years, and even forgot he ever invested. Then someday his mom said, "Hey, did you ever invest that money?" He checked, and it was worth $180,000. He cried, not because he's rich, but because he realized he didn't do anything. And that's the secret. The market doesn't reward intelligence. It rewards presence. And the smartest investors, they're never present. They're always analyzing, always optimizing, always waiting. While the dumb guy, he's sleeping, hiking, watching Stranger Things. And his money, it's compounding while he's not even looking. Here's the math. If you invest $500 per month starting at age 25, you got $1.2 million by the age of 65. If you wait even until 35, it will be $520,000. That's $680,000 loss because you waited to be ready. You didn't lose because you were dumb. You lost because you thought you needed to be smart. The smartest investors never do this. They never stop trading. They think, if I just tweak it, if I just rebalance, if I just sell this one stock. But here's the truth. Every trade you make costs you. Transaction fees, taxes, emotional energy, time, stress, sleep, relationships, and even your sanity. And the dumb investor, he makes one trade, then walks away. He doesn't check. He doesn't panic. He doesn't feel guilty. He just lives. And that's why he wins. The market rewards patience. The smart investor rewards himself with anxiety. You're smart, you're analytical, you're skeptical. Good. Now do this. Right now, the smart person's dumb investing plan. Step 1, open a brokerage. Robinhood, Fidelity, Schwab, or Vanguard. Doesn't matter. Do it now. Step 2, buy one thing. VTI, Vanguard Total Stock Market ETF. It owns every U.S. stock. You don't need to pick Amazon. You don't need to pick Tesla. Just buy the whole damn pie. Step 3, set up automatic investing. $50, $100, or $500. Whatever you can spare. Set it to auto-invest every payday. Not when I feel like it. Every payday. Step 4, delete all finance apps. Delete Robinhood. Unfollow every crypto guru. Mute finance TikTok. If you see a headline about market crash, do nothing. Walk away or eat a sandwich. Step 5, check it once a year. Maybe on your birthday. That's it. If it went up, smile. If it went down, smile. Because you're not trying to win the market. You're trying to win your life. The smartest investors don't lose because they're stupid. They lose because they think they're too smart to be ordinary. They think genius means constant action, but true genius? It's knowing when to do nothing. The market doesn't reward brilliance. It rewards consistency. It rewards silence, and it rewards presence. You don't need to be the smartest person in the room. You just need to be the one who stays, the one who doesn't panic, the one who doesn't trade, the one who sleeps. While everyone else is staring at their screens, you're living, and that's the ultimate edge. Comment, I'm done overthinking. And tell me, what's the dumbest thing you ever did with your money that actually worked? And if you're still watching, subscribe before you overthink it.